Hey, what is happening, Bulls and Bears? My name is JJ. You're watching Bull Boom Bear Bust. It is Friday, July 21st, 2023. And we got a lot of economic, financial news to get caught up on as usual. The economy continues to take a nosedive very, very slowly. We have the housing market now starting to turn. We're going to talk about that here in just a few minutes. And one of the questions I get the most is, when are home prices going to crash? When is the housing market going to come down? Let me go ahead and get into that first here. Let's talk about real estate, the housing bubble, and also why so many other, let's say, economists or um, analysts, got it so wrong on the housing market. Because so many people predicted a housing market to crash. The system of money is the reason why. Remember back in 2008 when the housing bubble first started coming undone, banks were not lending or lending very little for a long time. Now, since then, a lot of things have changed. We have guaranteed bailouts, aka too big to fail. We have money printing off the charts, money creation off the charts like we've never seen before. We have rescue programs, right? So now people feel like even if they buy a home they can't afford, they're just going to pass some rule that says you can't get foreclosed, because we saw what happened in 2020, right? Things like that. That's just a few small examples. We also have some FOMO taking effect here, so it's pretty weird. When mortgage rates are rising, people are more desperate to buy a home because they're afraid of rates going even higher. All right, so FOMO, rates are going up, so let's buy now. Otherwise, we may never be able to buy a home. FOMO, fear of missing out, not knowing that at some point with the higher mortgage rates, prices will come down. And yes, we haven't seen a crash yet. Prices are starting to come down. So let's go to this first article here. And this is Robert Schiler. He says a decade-long rally in home prices could end when the Fed wraps up its hiking cycle. So not when rates come down, when they just stop hiking, that's when the rally ends. So let me get this straight. So mortgage rates rising creates a boom because people are afraid of missing out. So they want to buy a home before rates get even higher. But when there's no more rate hikes, then prices will come down because then people are going to wait for the lower mortgage rates. Am I getting that right? Please let me know down in the comments. But here's what it says out of the article. By the way, Robert Schiler, Case-Shiller Home Price Index. I think many of you already know that. But for those that didn't, that's the guy, Robert Schiler. And here's what he says about this FOMO type of rush for people to buy a home. I think the fear of interest rate increases has influenced people's thinking. It's not just homeowners, it's new buyers who want to get in before interest rates went up even more. They want to lock in, so that's been a positive influence on the market, but it's coming to an end, unquote. Let's talk about this. Pretty wacky when rising rates are bullish and falling rates are bearish. But that's what Robert Schiller is saying. I mean, please let me know what you think down in comments. Is that what's happening right now? People are afraid of higher mortgage rates, not knowing that ultimately price corrections will happen. Also, this year, when it comes to the housing market, we're actually not seeing the big spike in housing inventory like we sometimes do see in the summer. Inventory is still very, very low, and that's because home sellers are refusing to list their home on the market. But pretty soon, even people that don't want to sell their home, a lot of people, I think millions and millions of people that don't want to sell their home, will be forced to sell their home when economic hardship finally shows up at their front doorstep. Let's go to a chart here. This is the San Diego home inventory. And if we look to the right side of the chart here, we see a slight uptick. But actually, it was the summer of 2022 when we saw this big spike in inventory right here. And that spike happened about July. We have data up until the month of June right now. So we don't know what July is going to bring. I think it's going to go up from June, but definitely I don't think it's going to meet or even come close to what we saw last summer. And to a lot of people, this is really, really mind-boggling that we can have mortgage rates so much higher now than they were last year, but yet inventory is so much lower. Well, here's some good news for potential buyers or people waiting for home prices to come down. The end of this year, you're going to see a very, very noticeable correction in the housing market. As the rental market comes down, more people that are tapped out of their home, that are house poor, more people are going to be incentivized to sell their home and go ahead and rent. And the rental market's definitely already dropping, and rents are stalled. And a lot of these students, we have about 40 something million people with student loan debts, they're going to have to move out of their rental and move back home with their parents. So that's going to be a lot of vacant rentals that are going to come up. And that's just one thing. There's lots of other economic hardships coming to a lot of people here in this country that are going to force them to no longer rent or go move in with somebody else. People moving in together, relatives, but it's going to be a definitely downtrend in rents. Also, when it comes to home ownership, the cost of owning a home has never been higher, and it's not just the mortgage rates; it's actually the maintenance, the upkeep, the materials for fixing up a home and maintaining a home, the insurance. Of course, you have the taxes on these near record high home prices, and how much money left over for taxes and all those other home owning expenses are people going to have after filling up their gas tank, after buying groceries, after everything else that's super elevated with this insane, chaotic cost of living. So the drop is going to intensify going into the fall and the winter of this year. I still don't think it's going to be a crash, but it's definitely going to be very, very noticeable in the coming months ahead. And also, if we look back to the 2008 housing bubble, when the Fed started cutting rates, prices still came down for over 2 years, even as the Fed began cutting rates, because the Fed cutting rates was basically a reaction to such a weak economy and so many job losses, the skyrocketing unemployment. And that's another negative aspect to how people react to when the Fed is cutting rates suddenly, right? But it's going to be very, very tricky because the cost of living, if the cost of living doesn't come down and they start cutting rates, all you know what is going to break loose. All right, so let's transition a little bit here to the next topic. Folks, here is a crazy one. The Fed says Taylor Swift's tour, the singer, the pop star Taylor Swift, boosted the economy. Market research said estimates add up to about $5 billion. So people spending money on hotels, of course, concert tickets, traveling to go see Taylor Swift, they're saying that's a boost in the economy. So another perfect example of how economic growth is basically people going out and spending money. I won't say wasting money because Taylor Swift has a lot of fans. They might come after me. How dare you say wasting money on Taylor Swift? It's not a waste. $300 tickets to see Taylor is a bargain. It's not a waste of money. Anyways, waste of money, not waste of money, but spending money, going to a concert, swiping credit cards, that's what's called economic growth. So now basically this is boosting the economy. It's pretty ridiculous that people spending money on entertainment is considered, economic boost or economic growth. But that's the type of financial system we live in, where spending money, even though it's dumb spending, maybe not, if you like Taylor Swift. Actually, she's got a few good songs. I shouldn't say that. And some people may say she has a lot of good songs, but I'll sit and listen to the songs on my streaming device and not go out and pay $300, whatever it is, for a ticket. But basically, people that are in debt, most people, I'd say, going to this concert probably are not homeowners. It's probably a bunch of younger type of people, millennials, if I had to guess. And most of that particular age group doesn't own a home. Most of them have student loan debt, and most of the people with that debt have a lot of student loan debt. But yet they're going to go out and spend money on seeing Taylor Swift. Again, nothing wrong with that, to each his own. As long as you have at least 30 days living expenses, I don't care what you do with your money. You can go spend it at a casino if you want to. There's actually people out there thinking that they're going to beat the casino, even though the house always wins. You may win some bets, you may win some hands, but in the end, if you stay at the table, if you keep gambling, if you keep pulling the lever, if you keep rolling the dice, the house will always win. All right, next, let's get into this article here and the situation with microchips. The U.S., we were going to have this big microchip factory in Arizona started up here. That was going to be a major factor in the number of automobiles that are created, that are produced, that are manufactured. But now the microchip factory has been delayed because lack of skilled workers. We have not enough skilled labor in this country. We have a lot of people with degrees in art and degrees in drama and degrees in all kinds of things that they think will be useful, but really we don't have enough skilled workers. We don't have enough simple, just people to do simple jobs. Maybe not simple jobs when it comes to microchips, but as far as being able to make yourself useful in production and manufacturing, it's a very small segment of the population here that we're seeing. And this has a major impact on automobiles manufactured and, of course, inventory, and therefore prices. All right, folks, we are going to wrap this up. I want to give a special thanks to everyone out there that is subscribed, that comes back to watch this channel. If you'd like to support this channel, please make sure you are subscribed, and please make sure you come back for more economic news updates. What do you think about the housing market? Robert Schiler, people swiping their credit cards, going to hotels to watch a singer. That's a boost to the economy. If that was a boost to the economy, then why don't we just have more tours? Why don't we get every major pop star out there to just go on tour, and all the problems are fixed? That we'll have a permanently booming economy. If that's all it takes, right? You got to laugh at some of this stuff, folks. All right, everybody. Big love. Keep stacking. Bye for now. Talk to you soon. Peace.